Welcome to Financial Issues, where we help you steward faithfully by honoring God with your investments. Now listen in as we give you the practical tools and advice you need to become a biblically responsible investor.
This is Financial Issues, where we help you defund darkness and fund the light by investing with biblical integrity. On today's show, folks, average car payments, new car payments in particular, continue to rise to record levels. What do we do about this as we do see costs continuing to go up? It seems. Not to worry, we're here for you. Seth Udinsky, Sam Case is not here, actually. I was going through my usual motions there, Mark. I'm Seth Udinsky, and your host, Mark Manila, is here. Sam's on vacation, and now I'm going to take a breath. Mark, good morning.
He is. Yeah, and I just want to bring up right at the top this week's verse. We haven't really emphasized it a lot this month, but this week's verse is 1 Thessalonians 5:15. See that no one renders evil for evil to anyone, but always pursue what is good for both yourselves and for all. Strong verse, and here's what I really like about it. As Seth would say every morning, Monday through Friday, this is investing with biblical integrity. This verse is specifically investing with biblical integrity because it purposefully investing so that everyone wins. It honors God. It shows that investment isn't what's that term? A zero-sum game. Somebody doesn't have to lose for somebody to win. Everybody can win in the situation when you invest with biblical integrity. You know, and it uses wisdom to discern and invest in a way that shines the light on the glory of God, you know, and godly principles. So I just love this verse for the way it says, everybody wins. It's a win-win situation. That's, as Christians, that's what we always want to see, is a way for us, for others around us, put others first, they win, and then we win as well. And obviously, it's a win for God because we're all following him and honoring him and glorifying him with what he has entrusted us with.
Yeah, Mark, it's so true. I mean, this is one of those common sense verses. You know, why would we not want to pursue what is good both for ourselves and for all? I mean, that should be at the core of what the Christian desires to do. And, you know, Mark, when we think about what is the ultimate good or the highest good, it's what God wants for us. It's obedience to God. It's living within his will, living within the center of his will of desire, that we would obey him and honor him in all things. And that includes our money.
Yeah.
Includes our money. Yep. Great stuff, brother. Well, I'll tell you what, Mark, let's jump right in, shall we? This is a great question that we got from one of our younger partners. His name's Christopher. Christopher, thank you for your question, brother, and for your partnership. He's 27 years old, Mark. He says, Mark, I hope you're doing good. I think you are, Mark. I think we're having a good morning. Christopher,
it's a good day.
We are doing great, brother. He says, I have a question about which allocation model would work best for me at age 27. So for any of you who are not partners, by the way, we offer as part of our partnership different allocation models based on your age, generally speaking. So he's wondering which allocation model would work best for him. Again, he's 27 years old. He says, I'm also curious what things would be best for my Roth account versus my traditional IRA at my age. I have a decent amount extra every week to invest in, and I'm trying to aim towards aggressive growth, so any help is appreciated. Thank you, Mark. What do you think, Mark? How can we help Christopher?
Well, absolutely. Christopher, at your age 27, your greatest advantage right now is time. You have time that if you invest in something aggressively and it pulls back hard and it takes a half a year to 3 years to recover, but it recovers strong as well and then keeps going, you have the time to recover. You don't need this money at this point in your life. At this point, you have yourself to create income to bring it in. So leaning towards aggressive is a great idea. Then the way you would do that currently in your partner hub, you go into the partner hub, grab the growth portfolio allocation, and then when you fulfill it, you look for those items that say aggressive on them. Instead of just growth, aggressive growth instead of growth, just growth. And you can utilize some of those. Make sure they fit, obviously, who you are and what you're trying to do, your goals. But yeah, a few other things I would say is make sure you got your emergency fund, your moat around your castle in place before you take all the money that you have and start jumping it in every month. You want to make sure that you don't have to go to the credit card or borrow money when something happens out of the ordinary or those occasional expenses come along, maintenance expensive repairs, things like that. So make sure you have your emergency fund, the moat around your castle, structured, funded, and systematically being funded so it replenishes itself every year. Also, if you do have debt, if you have any toxic or high interest debt, you might want to be working towards getting that paid down first as well. But because you're countering your investments. If you have credit card debt, $20,000 on a 29% credit card, your investments oftentimes aren't going to outpace that. So you want to be very careful and get that debt paid down first. And then start your monthly or weekly investing. So
Absolutely.
I agree with Christopher. I think he's thinking correctly
I think so too.
about the type of portfolio you should have. And, I've been working with, and one of the things we've reinstituted is starting to find aggressive investments. And what makes something aggressive is maybe it has the financial steel, or maybe it's just missing one thing in the fundamentals that we would normally like to see, but it is growing towards fulfilling that aspect or that data point. And the growth potential is huge and the projections are huge. So it has a lot going for it, but it doesn't meet the financial issues steel that we always talk about. That would be aggressive. Or it meets the financial issues steel, but it's valued way higher than the average company in that industry is. Well, we might look at that and say, well, there's a reason for this. And we think it has the potential and the ability to make it through even the high valuation. It might be worthwhile for a long-term investment to go ahead and get into this, but we'll call it aggressive because it is out of the ordinary and it will take a more precise execution than most companies would do to make this work and to get the returns that we believe it could bring in. So we would label that aggressive growth instead of just growth. And we're starting to do more and more of that in the broad lists and the buy, sell, hold lists that we keep for our partners.
Yeah, Mark, that is awesome. One of the things that I'm just thinking for Christopher is it's less of a concern for him right now for preservation, for income. If he's in his 60s or 70s, that's that. Right now, Christopher, your biggest concern with your investment should be long-term growth. Obviously, safe growth and not being unwise, but you can be much more aggressive than someone in their 60s or 70s can, and I think you should. And Mark, I'm personally excited for that potential for a aggressive-ish growth model. I think that'll be fun.
Absolutely. In his questions, obviously this is a smart 27-year-old man.
Yeah.
He's asking some good questions and are asking some good points in this question. One is, where should he put it? Well, if you're really going for the long term, if you're going to be buying some stocks and you're thinking, this is a good 5, 10, 20-year hold on this. It's a new industry and it's leading the industry. I think I'm going to hang on to this a long time. That would be a Roth type of investment because you never want to have to pay the tax on something that goes up 12,000%. You don't want to just defer that tax to the future where you have to pay, where every penny you take out, it has to be taxed on it. So that would be good. We always say, whenever possible, put anything you can into Roth, but obviously the longer term growth would be good, or the accelerated growth type stocks, those that you think are going to be the rockets in your portfolio would be good there.
Absolutely. And, Mark, one other advantage to that, too, is, if Christopher uses the Roth, he avoids those pesky little buggers we call RMDs, which you have to do in your traditional. Yet that's not a requirement for the Roth. So that's great.
That's true.
Yeah, I'm so with you, brother. Mark, what about a Roth conversion? Should he just avoid the traditional altogether and just put it all in the Roth? Or do you think it's okay to have some in a traditional?
There's only so much you can put in a Roth.
Yeah.
But if I had my druthers, I would rather put the max in the Roth and not split it between a Roth and a traditional.
I've never heard that phrase before, Mark. That's fun.
Oh, I'm sorry. Did I pull from an old cowboy movie or something? Well, folks, I think I'd rather do this than that. Yeah. No, it
Sure.
is good. Whenever possible, I would fund the Roth first. And then obviously if you get a rollover or something, you could do a conversion from that rollover. If you roll over a 401k, as you switch between occupations or jobs, you could roll over your previous 401k into an IRA and then do a conversion depending on your tax situation at that time.
Well said, Mark. Hey, let me make a quick note here, Mark, that we have a conference call today, folks. Conference call today for partners only, 3 p.m. Eastern time. Make sure that you join us for that. You can get the login information and access code on financialissues.org.
Yep, 610-363-1110. Love to hear from you.
You never have to lose access to Financial Issues. Stations change programming, shows come and go, but your connection to Financial Issues doesn't have to. With the website and app, Financial Issues is available whenever and wherever you need it. You can watch the show live, listen on the go, or catch up on episodes you've missed with on-demand access to previous broadcasts. You'll also get the complete Financial Issues experience, including exclusive bonus content like Friday's Overtime segment. And it gets even better than that because the website offers even more ways to stay informed and engaged. Be part of the conversation by joining the live chat during the show, read articles and market insights, and explore educational videos to help you become a better steward of God's resources. So what are you waiting for? Download the Financial Issues app or visit financialissues.org today. Stay connected, stay informed, stay with Financial Issues. It's great to be here with you today, folks. Hey, our phone number is 610-363-1110. We are so grateful to have so many listeners who love to talk to us live on the air on a daily basis. So if you want to join the live broadcast today, that's the number to call in. We'd love to talk to you and answer any financial question you might have. 610-363-1110. Mark, the markets yesterday were somewhat mixed. The Dow Jones was down about a full percent. S&P 500 down about a quarter. The NASDAQ mirrored the S&P, was up slightly. And the Russell 2000 down almost a full percent. Not a terrible day for the markets, all things considered, because of the news in Iran. They seem to hold their heads rather well. And this morning, everything is nice and green. So that's good. So I don't know if people have just...
It's absolutely amazing.
Yeah.
That's why I'm always amazed when I'm either interviewed or I'm asked to respond to somebody's article that they've written or something that is this in the economy, this in the markets, this in the administration. It's like, how can people be so down with the resilience that we're seeing in the economy, in the American people? I mean, all the trash that has been thrown at us, and we still just get up every morning, smile, praise God, and keep going. And the same is true with the economy. How cool is that?
It's awesome, Mark. Yeah, it really is. And you know what, Mark? I'm glad you brought that up because there's a headline here that I want to get your take on that has to do with that, seeing the resilience in the economy, despite the fact that it seems like things keep getting more expensive. So I saw this yesterday. Looks like America's affordability crisis continues with new car payments rising to a record high in 2026. So there was a new report out for the first quarter of 2026 found the average monthly car payment for a new vehicle rose 2.9% from a year ago to a record of $770. Used car payments saw a smaller increase, so they're not up at record highs, but they're up near about $530 or so. The average auto loan amount for the first quarter was around $44,000 for new vehicles and about $27,000 for used vehicles. So I think what we're seeing here generally, Mark, is that things are expensive. Now, we've seen the Trump effect on the economy and on the markets, and there's a lot of positives that have come with it, and we're excited about that. Yet, it seems like for many average Joe Americans, and I'm sure even folks in our chat can probably agree with this, stuff is still expensive. Would you guys agree? I mean, stuff is still expensive. What do you make of all of this, Mark? Are we seeing that correctly, or is there something that we're missing here, comparing it? What do you think?
Let's be fair. Yeah, there's some things that are more expensive, but you know what? What's happening here is what the doomsayers and the anti-Trumpites and all the people who hate conservatism are doing. They're taking very short-term measurement data points and using those to come up with negatives. For example, I have been doing for the last 18 months, where every month I'd look at where are we on pricing on different things throughout the year, or since 2020 through 2021, through the COVID crisis when everything peaked. And, cars are still down in price from there. But over the last few months, they've peaked up. So it's a negative thing. I get it. It's true. It is a negative thing. We don't like that. We don't like the idea that because of the cost of fuels and the inflation that we've had because of the energy fuel situation with the Iranian war and the politics going on. We don't like that, but it still is what it is. But overall, we're doing better than we were 3 years ago. We're just not doing better than we were last month in general. So what's happening is anybody who does not like the conservative movement that has taken place and has taken over America again is finding any data points they can to say something ugly. And this is one of them. And I understand that. But you know what? Does everybody really need a new car every year or 2 or 3? I think what's the average now? 2.75 years. The average person keeps a car. Yeah, it's outrageously ridiculous. And with all the new and with what's going on with the need for more chips because of the data centers and stuff, and every car now has over 100 chips in it, 100 different little miniature computers in it. Obviously, the price is going to go up on them, on new vehicles like that. So, does it mean that? Does it mean the world's ending? No, it means it's a blip. If it becomes a trend, when we see 2-3 quarters of rising prices in automobiles, that's an issue. That becomes an issue. But what I'm hoping to see is actually the price of almost everything continue to either stabilize or come down as the real wage continues to grow. And that's another one, real wage growth, Seth. I don't know if you remember, but for almost, all of last year and just the beginning of this year, we had real wage growth actually superseding inflation, which means wages were increasing faster than the cost of goods. Now, just recently with the war in Iran and stuff and the price of oil going up, inflation has risen, so real wage growth did not keep up. So what did everybody harp on? Well, real wage growth is down from last month. These little blips do happen during wars and political years when everybody is throwing trash everywhere. It's going to happen. But we have a resilient economy. We have GDP growing. We have trillions upon trillions of dollars building plants and building businesses now. We're seeing an incredible foundation being laid for a possible great future. I think the economy is just an incredible economy at this point. And I'm hoping that we'll be able to see that in the second half of this year.
Absolutely. And, Mark, you've been pounding the table on, our leaders addressing our ridiculous debt crisis. Is that the key to making things more affordable? Because we're seeing, like you said, strength everywhere else, yet things still continue to be relatively expensive. Is that going to be the thing that once we address that could be it?
I even want to challenge what you just said. You said,
sure,
we see strength, but everything's more expensive. Everything isn't more expensive. We've seen eggs come down 70%. Yep. We've seen a lot of food products come down over 50%. The price of things since their peak. Now, I know since their peak is a hard comparison since the last administration destroyed so much so quickly. Yeah. But still, it's headed in
a bunch of chickens.
The longer term trend is still headed in the right direction.
Yeah.
Even with the war, even with the higher energy prices. And energy prices are even down. You think about it compared to, I know we had on again, off again, peace treaties and memorandums of understanding and stuff like that. But the reality is, people were projecting $300 a barrel in gasoline or in oil when Trump bombed Iran. it never even got close. It's incredible what's going on, and the resilience and the strength of our country. We should all be rejoicing, and we don't want to turn a blind eye that some things do cost more, and maybe those things are the luxuries. When we see luxury cars going from $60,000 to $180,000, that actually causes the average cost car to go up as well. When lower cost cars are rising, even there's so few lower cost cars. I don't know if you've looked at automobiles, but the bottom line on a car has power everything and screens everywhere and computers everywhere. I mean, you can't get an economy car anymore that doesn't have all these things in it. So obviously the price has gone up, and until there's a surplus in chips and screens and things again, we won't see that price come down.
Absolutely. Mark, here's my last question for you. From a stewardship perspective and a planning perspective, is it wise for the Christian steward to plan as if things will get more expensive in the future, they'll stay the same, or they'll become cheaper?
That's a softball, isn't it?
I suppose so.
Yeah. Obviously, we have with the Federal Reserves, when we have central banks around the world colluding to keep inflation at a minimum of 2%, artificially creating inflation through the creation of money out of nothing, printing more money is the way we used to say it, and pouring it into the markets to make sure, into the banking system, make sure inflation stays at least 2%. That alone should tell you everything will always go up. Yeah, we have innovation that brings the price down. We saw the price of computers. There used to be, I forget what they called it. It was something syndrome or something, where the price of computers came down like 50% every year for a long time, because of the innovations and things like that. Technology does allow that. And we're going to see more technologies, innovations that bring prices down in other industries besides just the tech industries. And as we do, so even though it's being brought down in production and manufacturing costs, maybe even in labor costs, because of the machinery being used, that makes it faster, easier for somebody to do multiple jobs instead of just one. What we'll see is that inflation will keep moving the cost of all goods up. In reality, it's not increasing the price of things, it's reducing the buyability of the U.S. dollar.
Makes a lot of sense, Mark. So maybe
purchasing power.
Maybe the answer for that too is even to say it could depend on the industry. Like you said, eggs have come down. Gas has come down. Now it's spiked, but it has been coming down, and it's been stabilized. So good. Yeah. Good to be a wise steward with all that stuff, Mark. Very good.
Absolutely. A wise steward, whenever you plan, whenever you do a financial plan, whenever you plan financially, you plan for the worst. Yeah. And then if things go better, you end up better. But if things don't go right, you still have a plan for that, and you still carry on, and your plan works. So it's always better to assume that all the negative numbers are going to be higher than they really are, and all the positive numbers, like your return on investment and stuff, are going to be lower. Then when you're wrong and you make more money, or inflation is less, or prices do come down, you still win, and you win even bigger. So good planning plans for the worst along with the best is what I'm trying to say. That is what stewardship is all about. And that's what we're all about, helping you to be the best steward possible. If you don't plan that way, you're going to be in for some really sad surprises. And that hurts, So, Well, we're coming to the end of segment 2. If you have to leave us, we look forward to seeing you tomorrow. Remember, you can join us for the full broadcast at financialissues.org, Monday through Friday, 9 a.m. Eastern Time. Hope you have a great rest of your day. And for the rest of you, look forward to seeing you in just a couple of minutes.
Welcome back, everyone. Great to be here with you. Get your calls queued up now. Join the live broadcast at 610-363-1110. Today's show, of course, brought in part to you by our friends over at Samaritan Ministries. Can't say enough good things about Samaritan Ministries, providing a truly Christian health-sharing option. If you want to get off of the big healthcare rat race, check them out, SamaritanMinistries.org. You know, Mark, we have some interesting things happening here with Samaritan, speaking of which. So back in 2025, Trump's big, beautiful bill eliminated funding for Planned Parenthood, and all God's people said, praise God. However, the One Big Beautiful Bill Act had it had actually blocked Medicaid reimbursements to Planned Parenthood, similar organizations. Wonderful stuff. Sadly, on America's 250th anniversary date, actually, Congress missed the deadline to continue prohibiting the funding, and so as a result, government funding has resumed for Planned Parenthood on the nation's 250th birthday. Can you imagine the irony of that? Back in 2020. Back in April, actually, of this year, Samaritan Ministries' Joel Noble even signed a letter asking Congress to extend the funding ban on Planned Parenthood. This is a fight that's been happening here, Mark, and I'm so excited to have Joel joining us right now to talk about this. Absolutely. Welcome to the show, Joel.
Well, thank you for having me.
And thank you for signing that letter and getting it to Congress. There's a lot of people don't believe those things have any impact, but I know that they do. And actually, we have a petition that we're sending as well, dealing with the Trump accounts for kids, how they don't have any biblically responsible investments. So effectively, they're excluding Christians from participating in the Trump accounts for kids. So we're getting that to them because we believe that, like you do, that the Trump administration, once they realize what's going on, they'll do something about it. And hopefully they'll do something about this right now that we're talking about, the defunding of Planned Parenthood. Can you give us a little bit more overview on this? What's really going on with this? Why didn't it get extended? Why did it have a deadline on it instead of just carrying on forever?
Yeah, absolutely. So the nature of what's called a reconciliation bill, and that's just a large omnibus type bill, and it's a procedure that the founders put in for the Senate. But it also has limitations, and what they do in a reconciliation bill has a end date, in this case 1 year. And so when they passed the big beautiful bill back in 2025, that only went until, as Seth said, July of 2026, and on our nation's birthday on the 4th, that expired. And so the $500 million that was going to Planned Parenthood will now be going back to them and a few similar organizations.
And that's so sad. I mean, why couldn't we, I get on rants, so excuse me about Congress being lazy and not doing their job. Why are they leaving this all up to the president to have to do this over and over again and make things happen, by executive orders or other things, instead of doing their job and listening to the people and getting stuff done? We need more than reconciliation bills. We need this Congress to actually balance the budget. We need them to cut these fundings of organizations that are doing ugliness, darkness, and waste and fraud. And we just can't seem to stop it. What is something that we can do as individuals to move this along?
Yeah, I would say definitely be reaching out to your person in Congress. I mean, the more that they hear from especially from their constituents, it's great that, a lot of us signed on to a letter, but they need to hear from the people that actually cast the votes for them. So reaching out to your congressperson to tell them that any reconciliation bill that they consider should not include the funding, or make it so that there's not funding going there. I think they're just really scared of public opinion, and they see, news stories like, well, this is really just for STD and cancer screening and things like that. And so, I mean, the, 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 while Medicaid can't pay for abortion, even, when this ban was, even now that the money's coming back, money is fungible. And so the money that they're getting, that, clump of dollars as they would see it, would help pay for other things, so that frees up cash for abortion. And so the elected officials they need to not be afraid. It's a winning issue. And so they need to stick with it. And so I would just, reach out to them, tell them this is important to you. This is a winning issue. Just, put that moratorium back in.
And like you said, this is an election year, so maybe we should start electing representatives who actually have the spine, to do the right things, and not just to try and keep their job and worry about being voted out. If you just do the right things, you'll honor God, and God will take it wherever it needs to go.
100%. Yep.
Yeah. And there's things we can do. For example, if you're paying for your own health insurances, maybe not go with something that supports abortion or supports transgendering and things like that. But there's not very many places you can get insurance that does that. So what does somebody do for their health insurance if they want to avoid those type of companies?
Yeah. So it's incredibly difficult, because even if your state doesn't mandate abortion, which many do, there's 7 states to where you're not going to be able to buy an insurance plan outside of maybe a church group plan. And even then, it's very skeptical whether you're going to be able to do that. And most insurance companies, even though you may not see a rider, in there, or you see abortion coverage in your insurance policy, that small company or medium-sized company is probably owned by a big company that's providing for abortion. And so a 100% way to know where your healthcare dollars is going is healthcare sharing, like Samaritan. And that's one of the things I hear probably most often, just the freedom to know where your money's going. We love the freedom to be able to go to any provider we want. And I've, talked about that in previous shows, but not supporting the darkness, knowing that when you write a check or you transfer your money, that's going towards a medical need, and you know exactly what that medical need is. And it's not abortion, and it's not transgender, surgery, and it's not anything else that violates your conscience. And so you can give that money to support the kingdom and not support the darkness.
I love that. One of the things I really like about it is every month we get together at Financial Issues, and we pray as a company for the people that we're sending our money to as part of Samaritan's Ministry International to help them with their bills. We get the names of those that we're actually supporting and helping their bills with. And we not only can financially serve them and help them, but we can cover them with prayer for healing and for strength and for all the things their family needs at that point. It's such a wonderful environment to be in, is to have a healthcare coordination like that, to where Christians coming together, praying over one another, and financially helping one another with their healthcare needs, and it's a beautiful thing. And we're so glad for Samaritan Ministries and International, and we're so glad that you could take the time to join us today, Joel. Thank you so much.
Thanks for having me. Yep, and thanks for your partnership. We feel those prayers here too. So thanks for praying.
All righty. God bless you, sir.
You too. Have a great week.
All right.
Thanks, Joel. Great interview, Mark.
Yeah, I love the idea of prayer. It's them and like another one of our partners, Preborn. They just don't give women with emergency pregnancies or whatever you want to call them, ultrasounds. They come alongside them. They help them with the needs of if the woman would choose life, to help that baby with the things that the baby's going to need, diapers and formula and stuff like that. And they help them with their spiritual needs as well. Our partners, the ones that we allow to partner with us and we get to partner with them, are those people who are serving God and honoring Him, and doing so in the way they care for one another, the way God's Word tells us to do. And that's a beautiful thing, Seth.
Yeah, no, it really is, Mark. I mean, it's amazing to be, if you're a new listener to our show, you actually may wonder why we have such different sponsors who we come alongside, they come alongside us. But ministries like Samaritan and Preborn, they're united with the mission of financial issues because they're ministries that are all about defunding darkness and funding the light. And it's in their particular lanes that they do that, Mark. And boy, it's just a wonderful thing to be able to partake with such great ministries like this. Pretty cool stuff.
Amen. Yeah. Amen to that. And that's the one side of what's wonderful about being with financial issues. The other side is we have great partners. We have incredible listeners. We have incredible viewers. And the people that tune in with us are all seeking a deep relationship with the one true God through Jesus Christ. And in doing so, they want to learn more and more about what stewardship means. And we help them to do that by answering their questions. So if you have a question, 610-363-1110. Give us a call. We'd be happy to answer your question here live. Of course, you could send it in via email, but why not go live and let's make it work here? Also, I would like to let you know we'll be right back after about 2 minutes.
The opinions and recommendations expressed on this program do not necessarily represent the opinions of the station or any of the program sponsors. Additionally, all products or services offered by the program sponsors may not be known by the program.
610-363-1110. Hey, folks, we'd love to hear from you. Join the live broadcast today, 610-363-1110. Mark, let's bring a little full circle moment to our show here in the last segment. Let's jump back to what we talked about in the very first segment with Christopher's question. Karen has a follow-up in our chat from Alabama. She's saying, if you close your Roth IRA, does it have to show up then on your tax return?
If you close it, I guess you mean withdraw the money out of it. And,
Yeah. Shut down the account.
Well, obviously, if you're at the age where you're able to take the money out without penalty or taxes, it seems like there would be no need. But yes, you do. There's a filing that has to be done. I believe you will receive a 1099 from your platform, and that has to go with your taxes. It doesn't mean you own any taxes, but it has to be reported. Why do we do that, or why is that necessary? I don't know. Outside of our government likes to have their hands in everything.
That's about it. That explains it.
Reality.
There you go. Love that. So good stuff. Karen, that is a good question. I'm glad that you asked it. And yeah, that's one of the benefits of the Roth IRA too, Mark, is as long as you hit those benchmarks for it to
59 and a half, 5 years. 5 years, is longer.
Yep. You have the freedom to withdraw it all if you want to. Now, it might not be the best thing for you to do necessarily, but if it is, if you need it, you got the freedom to do that.
Yeah. I mean, that's what you've been saving up for and investing for, is to utilize that money, hopefully in a way that honors God. And one of those ways is by caring for yourself and your family and those that God puts in your path. You know, so. Yeah,
absolutely. And Mark, it seems like there is a contest in the chat right now. I'm loving it. Folks are, based on our conversation in segment 2 about auto prices, they're talking about their oldest cars. So I'm seeing 2006, 2005. One car, Judith, has a 2007 with 450,000 miles on it. Oh my goodness.
What is it, a Toyota?
It's amazing. It's a Toyota Cruiser. Yeah. That is awesome.
Cindy and I have owned some Toyotas over the years, and we've seemed to get 250, 300,000 miles out of them easily. We had one that we actually gave to her mom and dad, and when we upgraded to another used car, and they drove it for quite a while. We gave it to them at over 100. They gave it to Cindy's oldest brother. He took it and drove it for a long time, and then he gave it back to us with over 200 and some thousand miles. And he's rather abusive to cars, by the way. And then we gave it to our trash man one day, said, what are you going to do with that Toyota? And we said, we're not sure yet. We're putting the dash back on that her brother had taken off.
Abusing the car, right?
He said, I really needed a car. And I said, Okay, we gave it to him, and we saw it on the road a year and a half later.
No way. So it's still going. That's amazing.
Yeah.
That's
so
amazing.
One of the biggest transfer of wealth, Seth, that a lot of Americans don't realize is the automobile.
Yeah.
The idea of buying new cars makes no sense since they lose 20 to 30% of their value right off the bat.
Yeah.
Taking it off the lot. Buying used cars is good, but taking care of used cars. I did a study that showed you could lose over $1 million in your lifetime by buying new cars and then financing them. So the money you lost in interest and unrealized potential on that interest and the cost of the cars is over $1 million in an average driver's lifetime. And if you just stopped and put the money away for 5 years, kept the car you had and put enough money into it to make sure everything was working properly and what I did was I went around and I wanted to make a 10-year-old car like new. And the most I could spend, by the way, I did this a long time ago. This was 40 years ago, the study. But I could only spend like $5,000. That included upholstery, brakes, just doing everything that needed to be done to bring this car up to being like new. You keep it for 5 years, put your payment that you would have paid for a new car away for 5 years, and then you go buy a new car with cash. And then you keep putting the payment away, and every 5 years, 5 to 10 years, you could buy a new car and still come out with hundreds of thousands of dollars at the end of your lifetime.
Yeah. It's amazing, Mark.
Is that incredible?
Well, you know what, Mark? It comes down to common sense. Think about this. The purpose of a car is to get me from point A to point B safely. Meaning you need a car that works, you need a car that is reliable, a car that has the functions necessary. And so it does not need to be a new $100,000 car. You can do that with a relatively affordable car. And part of that, Mark, is, like you said, keeping the car you have, making the most of it, getting the necessary work done on it. I'm so grateful, Mark. I just passed the 8-year mark that I've had my truck. And I'm so thankful. I feel like a king driving a truck. It's an old one. It's a little rusty. Old, relatively. It's about 15, 16 years old, but I love it. And I'm so grateful that, the Lord has been able to bless us with that. Obviously there could come a day where I need to get, a new car, but then I can put those things into practice as well, just like you said, and only buy what I can afford and make sure that it's a car that's reliable. But the purpose of it, again, it's not a status symbol. It's not a carriage, point A to point B safely, right?
Yeah, absolutely.
So.
I'm a weird guy when it comes to car. My favorite car of all time was my first car. Maybe that's true with a lot of people. Actually, my second car. I bought a car before I was 16, and my brother wrecked it before I got old enough to drive it. But I bought a '67 Vista Cruiser. And I love that car. I practically lived in it, traveling here and there and stuff. And I would love to find another 67 Vista Cruiser in decent shape and just restore it and then put in some updated technology in it. And just, I could drive that for the rest of my life,
Yeah, absolutely. Yeah, it's good stuff. Good to see. It seems like a lot of people in our chat have a good understanding of good stewardship when it comes to cars, which is awesome. Mark, we got a question from Stacy here. And actually, by the way, let me mention this real quickly, Mark, before the end of our show. We do have a conference call today, folks, 3 p.m. Eastern Time, 2 p.m. Central, 1 p.m. Mountain, 12 p.m. Pacific. Mark your calendars. Make sure you join us for that. If you can't make it, it'll be posted after the fact, but we'd love to see you all there today. The login information is should be in your email if you're a partner, and it's on the website as well under the partner alerts page and the conference call page as well. And become a partner today. You can do that, and then you can join that conference call. Stacy's question, Mark, is saying, what are your thoughts on TE12? That's Palantir. She said, I bought a small percentage when it was on the buy list. Since it's been placed on the hold list, the price has decreased considerably. What do you think she should do, Mark?
Yeah. Palantir is still showing powerful business momentum. It's a really incredible company, actually.
Yeah.
Q1 2026, revenue up 85% year over year. U.S. revenue up 104%. And management raising full year revenue guidance to roughly 71% growth. That's pretty incredible. Our financial issue take is no change, though. It's still a hold. And the reason for that is that stock has priced in an awful lot of that perfection and that growth already. So we're staying with our hold. on it. We don't think new money should go there until it grows into its valuation or its valuation pulls back decently.
Mark, how does a company grow into its valuation?
Well, what happens is the earnings, the growth rate, it actually realizes those things. And so the PE starts normalizing as that happens.
Yeah.
So the revenues and growth, not just projections, not just forward projections,
but actual real facts backing it up.
Reality.
Yep.
The company grows as what happens.
Yeah. Simple. Mark, that's great. Adams 53 is saying, "Hey, Mark, do you see Caterpillar getting back on the buy list anytime soon?" It's right now a hold, Mark.
Caterpillar is like we just talked about, it's still a hold. It remains a hold. This is really a first-class industry company. Mm-hmm. It has long-term, strong tailwinds pushing it. I mean, think about the AI-related power demand, the need to build these data centers, all the construction that's going on, the mining, the energy development, all that requires cats. It requires big machinery. But even a great company can be a poor new money buy, Seth, as you know.
Yep.
And when a stock price has already moved ahead of its current earnings, its current values, it's hard to buy into it because it may take it a long term to grow into that. And execution has to be excellent. And you never know what could come along that could curtail an economy or an industry. So we want to be very careful with that. At this point, great company, but it's not ripe for new money at this point.
So at least a meaningful pullback, you'd say, Mark, before we even consider it, probably.
Yeah. I'm looking, and now this is just me at this point. I'm not telling people, don't buy into it at any point but I'm looking at, for me, what would make it a value worth buying into if in the low to mid 800s on price wise. Or maybe it'll take a year or two to grow into it, like we said.
And as of this morning, it's trading around $950 a share or so. So, that would be a meaningful pullback for sure.
Yeah, so it's just overvalued at this point.
Absolutely. Great stuff, Mark. I think that's about all the time we have today, but I'm sure, again, folks, I do hope that you all, if you're a partner, will join us this afternoon for our conference call. One more time, 3 p.m. Eastern Time, 2 p.m. Central, 1 p.m. Mountain, 12 p.m. Pacific. Hope to see you all there. It's going to be a good time, Mark.
I hope you will join us. We're looking forward to having y'all with us then, and we're having you tomorrow as well. And remember, tomorrow we have that special moment called Overtime, where we take an extra half hour to really focus in on your questions. So I want to thank you for joining us today, and thank you for honoring God by investing with biblical integrity. We hope to see you tomorrow, and if you get the chance, listen to our new Saturday show, Stewardship Today. God bless you all for being with us. See you tomorrow.
If we ever forget that we're one nation under God, then we will be a nation going under.
Thank you for joining us. This has been an FISM production.
Everyone.